I know President Trump's trade policy has been very controversial, but there's one thing everyone agrees on. When you slap a 25% tariff on imported steel, that's good news for the steel industry. So why the heck can't the stock of Nucor, the best-run steel maker on the face of the earth, seem to get any momentum? Seriously, this is kind of driving me nuts. Just this morning, Nucor reported a fabulous blowout quarter. The company delivered an 8-cent earnings beat off of the $2.05 basis, up 113% year-over-year. Sales came in higher than expected, up nearly 25%. Management says the next quarter will be even better. Yeah, what happens? The stock goes down, shedding 1.4%. Granted, Nucor had already pre-announced strong numbers last month, but here's the thing. Ever since President Trump announced his steel tariffs in the beginning of March, this stock has actually fallen slightly. We own Nucor for my charitable trust, which you can follow along by joining the ActionAlertsPlus.com club. We've got a 14% gain in it, mostly because we've been very good about trading around it. But I got to tell you, I expected the stock to roar thanks to these tariffs. It hasn't happened yet. So what's the deal? Nucor's putting up amazing numbers. It just seems like Wall Street doesn't want to give them any credit, as though good earnings don't count if they're getting a boost from government intervention. I think it's crazy. Don't take it from me. Let's dig deeper with John Ferraiolo. He's the chairman, president, and CEO of Nucor. Find out more about the quarter and what will take to get the stock moving. Mr. Ferraiolo, welcome back to Mad Money.
Hi, Jim. How are you?
All right, John, I was on the Alcoa quarter and the conference call, and they got hurt by tariffs. And I'm thinking, is there any way that Nucor's being hurt by tariffs, or is it all good for the company?
It's very good for the company. All you need to do is to look at our earnings for the second quarter. It was a record second quarter for the company, and it was our second best quarter in the company's history. So it was a very good quarter for us.
Do you think that people believe it's not sustainable, that it's really because your company's really only benefiting from the tariff, and if the tariff went away, then the stock would go down?
Well, Jim, let's take a look at the facts. You know, certainly we get a tailwind from the tariffs, but the tariffs really only have gone into effect, full effect, in June. So we're just beginning to see the impact of that. And if you look at the overall impact of the imports, there's been a very little change in the imports from the first quarter of last year through the first quarter and first half of this year. In the first half of 2017, imports were about 15 million tons. In the first half of this year, they've only dropped about 1 million tons to 14 million tons, a very small change. And that difference in the supply chain from imports were more than made up by domestic companies increasing their utilization.
All right, so you did talk about in the conference call that you now see the market is being based on supply and demand. It literally
Absolutely.
is just, all these tariffs did was, in your opinion, is level the playing field, correct?
Absolutely. And Jim, you've heard me say on this show how many times that if Nucor had a level playing field on which we could compete, we would be very successful. And we are. And you've heard me also say that we've spent lots of money during the downturn preparing for the inevitable upturn in the steel market. Well, it's here. We are capitalizing on it. There should be no surprise that we had a very strong quarter.
Now, it seems kind of an oddity to me. Just today, the EU put on a 25% tariff for trade diversion. Nobody even squawks that they put on a tariff. Everybody squawks when we do it. Do you see an imbalance between those two?
Oh, absolutely. But I have to say that it's really not surprising that other countries are beginning to recognize the threat that the massive global steel overcapacity presents to the sustainability of their critical industries like steel. So this wasn't a surprise to me at all.
Okay, now let's talk about actual business. One of the things that I think was really, you pointed out, this tubular business that you got into. I mean, with people trying so hard to get nat gas and oil out of the Permian, this is a home run, isn't it?
Oh, this was more than a home run, Jim. This frankly was a grand slam. Not only did it give great performance as a standalone business for us, but the synergies that it brought between our sheet group and the tubular group were phenomenal. Think about it this way. In 2017, the tubular division consumed 900,000 tons of our product. That was 900,000 tons we did not have to sell into the open market, which gave us a great advantage in selling the rest of our spot tons. It's been a very good acquisition.
All right, now, I used to cover I used to cover Bethlehem Steel. And they always told me that you can't really get more than 95% steel capacity utilization. Are you at the max right now at 95?
Hey, Jim, one of the best things that you could do for me on the show is to tell my team that they can't get better than 95% utilization. Because when you tell a Nucor team that they can't do something, I promise you, they will find a way to do it. Now, there is a limit to the amount of utilization you can get, but I think we can squeeze a few more % out. It's tough, but I think our team can do it. But that doesn't mean that our profits aren't going to continue to grow. Look at the mix that we're producing. We will continue to move up the value chain. We will continue to switch our mix to higher margin products. That's the reason we're investing so much money in galvanizing lines. Right now, we're in the process of building 3 galvanizing lines, which produce a higher margin. So although our utilization is beginning to peak, the margins that we're able to achieve, and therefore our profitability, will continue to grow.
And you're still putting more money in building plants because of this. So it's kind of an example of what happens if you level the playing field. Good companies build more plants to take advantage of it.
Absolutely. Right now, you've heard me mention that we've invested $8 billion during the downturn. And right now we're investing another $1.5 billion in 8 very strategic projects that will come online 2019 and some of them further on in 2020. We are very excited about these projects. They're strategic to Nucor, and they're creating good, high-paying American jobs for American workers.
Last question. Is anyone squawking at any price increase that you have put through, saying it's unfair?
Our customers are appreciative of us making sure that they get the steel that they need to keep their customers happy. And we've been able to do that. We have found, we have downstream business ourselves, many of them. And we have found in our downstream businesses that the price increases are recognized by the final customer as necessary, and they've been accepted.
All right, terrific. I'm sticking by my recommendation. I think you have a very inexpensive stock and are going to do really quite well this year. That's John Ferriola, Chairman, President, CEO of Nucor, which I think is a buy. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.